Hello dear students, I am Dr. Binoy Rekal, Associate Professor, Department of Commerce, Bhopal School of Social Sciences. The main objective of this module is to introduce you to the second method of depreciation, that is diminishing balance method. This method is also termed as the reducing balance method or written down value method. In this method, the rate of depreciation is fixed, but the amount of depreciation is always calculated on the opening balances of the asset every year. Unlike the fixed installment method where the amount of depreciation is fixed, in this method, depreciation is always calculated on the opening balance. The biggest advantage of this method is that this method has a uniform effect in the profit and loss statement. Initial years, the amount of depreciation is higher, whereas the amount of repairs is less. Whereas later on, the amount of repairs is more and the amount of depreciation is less, which means this method will have a uniform effect in the profit and loss statement. Dear students, I will be explaining the calculation of depreciation under the reducing balance method. We have an unsolved question here. On 1st April 2016, A Company Limited purchased a machinery for Rs 80,000. On 1st October 2017, second machine was purchased for Rs 40,000. On 30th June 2018, machinery which was purchased on 1st October 2017 costing Rs 40,000 was sold for Rs 31,000. And on 30th September 2018, machinery purchased on 1st April 2016 costing Rs 80,000 was sold for 62,000. And further, on the same date, the third machine was purchased for Rs 20,000. Depreciation was provided at the rate of 10% per annum on the basis of diminishing balance method. So they are asking us to show the machinery account for 2 years, that is from 2016-17 to 2017-18. This is the machinery account. We have the particulars column and the amount column. On 1st April 2016, the first machine was purchased. The cost of the machine was 80,000. That is the reason we have recorded that in the debit side. Entry is machinery account debit to bank. This particular year, there is no further purchase of any machine. There is no sale of any machine, which means we need to charge depreciation on the last date of this year. The last date of this year is 31st March 2017. The rate of depreciation was 10%, 80,000 at the rate of 10% for complete 12 months. The amount of depreciation is coming Rs 8,000. We need to close the asset account. The total of debit is 80, higher total to be posted in the opposite side, which means we have the closing balance of the first machine amounted to Rs 72,000. With this, the account is closed for the first year. Whatever is the closing balance in the first year will automatically become the opening balance in the next year. So on 1st April 2017, the closing balance of the previous year to be transferred in the debit side. So to balance brought down, machine 1, it is 72,000. As per the illustration, soon after 6 months, the second machine was purchased on 1st October 2017. That is the reason in the debit side we have mentioned machinery account debit to bank, and we have mentioned this as machine 2. In this particular year, there is no further purchase, there is no sale of any asset, which means we need to charge depreciation on both these machines. Depreciation is always calculated and charged on the last date of each year, and the rate of depreciation they have given it as 10%. This is diminishing balance method, which means the depreciation will be charged always on the opening balances of the each year. So opening balance of machine 1 was 72,000. This machine we have utilized from 1st April 2017 till 31st March 2018. So for complete 12 months we will be charging depreciation. Hence the amount of depreciation is coming 7,200. The second machine was purchased for 40,000. The rate of depreciation is 10%, but this machine we purchased on 1st October, which means the depreciation will be calculated only for 6 months, that is from October till March. So 40,000 at the rate of 10% multiplied by 6 upon 12, the amount of depreciation of the second machine will be rupees 2,000. Hence, the total amount of depreciation 7,200 plus 2,000, 9,200 we have shown in the outer column. Now we need to close the asset account. The total of the debit side is 1,12,000. Higher total to be posted in the opposite side, and we need to calculate the balancing figure. So 1,12,000 minus 9,200, the difference amount is coming 1,02,800, which means the closing balance of machine 1 will be 64,800 and machine 2 it is 38,000. Now comes the entry for the last year. As I said, whatever is the closing balance in the last year will become the opening balance in the very next year. On 1st April 2018, we need to transfer the closing balances of the previous year. So, two balance brought down, machine 1 it is 64,800 and machine 2 it is 38,000. In this particular year, machine 2 as well as machine 1 was sold. As per the illustration, they said on 30th June 2018, machine 2 was sold for rupees 31,000. So whenever we are selling the asset, the entry will be bank account debit or cash account debit to asset account. That is the reason in the credit side by bank we have mentioned machine 2 is sold for 31,000. This machine we have utilized for 3 months in this particular year, that is April, May and June, which means we need to charge depreciation on machine 2 for a period of 3 months. 38,000 multiplied by 10 upon 100 multiplied by 3 upon 12, the amount of depreciation on machine 2 is coming 950. Now we need to know what is the balance amount of this particular machine. So 38,000 minus 950, the value of this machine is coming 37,050 and this machine we are selling for rupees 31,000, which means there is loss on sale, and if it is loss on sale, it needs to be recorded in the credit side of the asset account. So we have mentioned the amount of loss, that is 6,050 to be recorded in the credit side. By profit and loss, the amount of loss is 6,050. With this, the total of debit side of machine 2 and the total of credit side of machine 2 is equal. On September 30th, that means soon after 6 months, the first machine was sold and they said this machine is sold for rupees 62,000. So whenever we are selling the asset, it needs to be recorded in the credit side. Entry will be bank account debit or cash account debit to machinery. So on 30th September, we have mentioned by bank sale of machine 1, the amount is 62,000. This machine, that is machine 1, we have utilized for complete 6 months from April till 30th September, which means we need to charge depreciation on this machine. The rate of depreciation, as I said, it is 10%. So we need to calculate the amount of depreciation. So 64,800 at the rate of 10% multiplied by 6 upon 12, the amount of depreciation is coming 3,240. So we need to know what is the value of this machine on the date of sale. So 64,800 was its opening balance, 3,240 was the amount of depreciation, which means the value of this machine was 61,560 and this machine is being sold for 62,000. That means there is profit on sale. The value of this machine on 30th September is 61,560 and this is being sold for 62,000, which means there is a profit of 440. This 440 we need to record it in the debit side of the asset account. Entry will be asset account debit to profit and loss. In the previous case it was loss, so we have recorded the amount of loss in the credit side of the asset account. And here it is profit, so that profit to be recorded in the debit side of the asset account. With this, the second asset account is also completed. As per the illustration, on 30th September, the third machine was purchased. If we are purchasing any machine, entry asset account debit to bank. So we purchased the third machine for rupees 20,000 and this was purchased on 30th September, which means we will be charging depreciation on this particular machine from October till March, complete 6 months. Depreciation is always shown on the last date of each year. So machine 3 rate of depreciation is 10%. We are utilizing this machine for complete 6 months. So 20,000 multiplied by 10% multiplied by 6 upon 12, the amount of depreciation is coming rupees 1,000. Now we need to calculate the closing balance. The total of the debit side is 1,23,240. Higher total to be posted in the opposite side and we have a balancing figure of 19,000. This 19,000 is basically the difference between opening balance of machine 3, that is 20,000, minus depreciation 1,000. Hence, the closing balance of this machine is 19,000. And this will be transferred in the debit side on 1st April 2018. That's all from my side, students. In the next module, we will take the next method, that is annuity method. Thank you.